Hello traders. This is the continuation of the wave theory. In this video, we will discuss zigzag correction tips. All right, let's continue with this discussion about wave theory. All right, so we know that the zigzag correction is formed of three waves A, B, C. But in this video, we want to focus on some trading tips that we can use when we are trying to apply the zigzag correction. Okay, so we know that a zigzag will form, very important, after a motive wave. So price went up bullishly, or price went down bullishly. Now an impulsive wave is always formed of five waves. This is very important for traders to know and also to understand. Okay, an impulsive wave is always formed of five waves. All right, so here it is. I'm drawing so we see five waves down. Now a correction is taking place after a five wave down, or after a five wave up, either after the first wave, or after the third wave, or after the motive wave itself. All right, very important. So because sometimes traders will learn the zigzag pattern and they will just apply it at the wrong place because they don't understand where and when the pattern will form. The pattern will form after an impulsive wave, either a bearish impulsive wave or bullish impulsive wave. So we see it now. 1, 2, 3, 4, 5 down. Price rally up. Okay. The A corrective wave should be 5 wave also. We know that already if you have watched the video that we call zigzag correction. So you know it now. Okay. The tips that trader can use is that when you see a rally after an impulsive move, the rally is this one. Let me color it in different colors so you may understand what I'm talking about. Color into orange. When we see a rally after an impulsive move, all right here, okay, if the rally is formed of 5 waves, the first thing that will come into our mind is a zigzag. This is the first tips, talking about zigzag correction tips. So you see the price went up here like this, okay, in this session, and you see it drop down 1, 2, 3, 4, 5. The first thing that can come into the mind of Elliott with trader is a zigzag correction, because you're going to assume that, well, a correction is normally 3 waves. That's the wave theory. You understand? A correction is always 3 waves. Most of the time. So 3 is equal to correction in the language of Elliott wave. So very often when we see 3 waves, we are the first thing that is coming to our mind after an impulsive wave. When we see 3 waves, we say this is a correction. That's the first thing coming into our mind. There are different types of correction, as I said to you, but that's the first thing coming to our mind. So we see an impulsive move, which means 5 sub-waves. And now we see a correction that is form of 5 waves. Where we say, well, what kind of correction is this? Because normally the correction should be 3 waves. So using the zigzag correction tips, when we see the A corrective wave, or we see a correction that is formed of 5 waves, we will be thinking that, okay, there are more to come. So see, now it went down. Now it's correcting it, the down move. The orange one is correcting the down move. But instead of being form of 3 waves for normal correction, it's form of 5 waves. So we see 1, 2, 3, 4, 5. We say, well. Probably, yes, this is not certainly, this is not guarantee. All right, that's what I'm saying to you. The wave theory. Watch the video that we call zigzag correction before watching this. It's a continuation. So we'll be thinking, well, there are more to come, because normally a correction is formed of 3 waves. This is the first tips using the zigzag corrective wave. Okay, so you see, so for instance, he were here, price went up, and then you see this section from 1, 2, 3, 4, 5 down, you may be wondering what kind of correlation is 5 wave down. A correlation normally should be 3 wave. So when you see 1, 2, 3, 4, 5, you say, well, there are more to come probably. So we will be expecting a big corrective wave, which will be 1, 2, 3, followed by another 5. So that's the first tips. All right. The second tips, as we have already discussed it, you see the price goes out, the price going up like this, highlight the 50% of the previous move. You see, it went up, so just highlight the 50% as they try rolling it back down. If it's rolling it down to the 50%, and you know that the 50% is psychological price level, and you are thinking to buy, analyze the subwave of the pullback, or analyze the subwaves or the internal waves of the rally after the downtrend. If the internal wave of the correction, of the pullback, or of the rally is 5 waves, the first thing that can come into your mind is that probably there are more to come. So the price may go up a bit, only to come back down again. This is very, very important. The second tip is that the C corrective wave of the zigzag will go below, in normal zigzag will go below, okay, the lowest point, okay, of the A corrective wave. So this is the highest point of the A corrective wave, this is the lowest point of the A corrective wave. As we see it, 1, 2, 3, 4, 5, and this one form of 3. If we are selling here, we will think that this low here will be taken out. In normal condition, in theory, should be taken out because the normal zigzag, the C will go below the low of the A corrective wave. But if after a downtrend we have the A corrective wave, and then followed by the B, we know also that there's a high chance that this C corrective wave will go above the high of the A corrective wave. This is in the case of a downtrend. So there was a downtrend, A, B, C. As the C is forming, here we will think that the C in normal conditions should break above, okay, the high of the low. If it is after an uptrend, we know that the C has a high chance to go below the low of the A corrective wave. These are 2 tips so far when we are talking about zigzag formation. The A corrective wave, if it's clearly form of a 5 wave, okay, this will click something in us, and we will be expecting more. Why is it so important to know this? Because a lot of ordinary traders, as soon as the price went up like this and it pulled back, for those who are using also TST, WSY, 8, you need to be aware of it. All right, price pull back like this, okay, and then you see a bullish cycle has begun or whatever, or it is in a downtrend, price went down and then rally like this, and you see a bearish cycle has begun. If the pullback is formed of 5 wave, you may think that the new cycle that has begun here has a high chance, okay, to stall at one point. At least we will check the 50% of the pullback and monitor it carefully. All right. So with the wave theory, we can also understand whether a cycle has a high chance to stall at one point before resuming again or not. The zigzag pattern, we're talking about zigzag correction tips. These are the things traders must know. All right. Very, very important. All right. Very, very important. In normal condition, a corrective wave is formed of 3 waves. So generally speaking, when we talk about 3, we are talking about correction. We are talking about 5, we are talking about impulsive wave. So we see 5 impulsive wave, and we see followed by another 5. Normally we see 5 and 3, 5, 3, 5, 3. But in this case we see 5 followed by another 5. Straight away we start thinking that if we receive a buy signal here, this move may stall at one point. Sometime. The third tip is that the price may go above the 50% of the pullback, so the B may go above the. Let me draw the line for you. This is the third tips. Sometimes you will see it because this is not exact sign. You will see. Let me do it properly. Alright, get it there. So you may see it like this. Instead of the big corrective wave stopping here, alright, it may go above, alright, the 50%, even go to 70% or even 80% of the previous move. You may be wondering, George, what's this? Just stay calm, alright, stay calm. There was an impulsive move followed by 5 wave. There was a 3 move, but stop above the 50%. Be patient. If it's going to continue, wait for it to break below the 50% and to give you a sell signal below the 50%. Break below, retest, turn around. That's how you want to catch it. So if it goes so far, it doesn't stop here. Sometimes aggressive trader will place order here to sell. So price hit the 50%, she start rolling it down, but it's not going to go down for long. But you come back again above it and continue to move to the upside because aggressive trader orders have been filled. You see the price coming down fast, but it's not going to go too far. The bearish momentum is not very strong, and only to continue to move to the upside. Sometimes you may see volatility around the 50% as the dangerous traders are taking these aggressive traders out of their trade fast. The next, so we will prefer it to return back below the 50% before we sell. Here again, we will do exactly the same thing. If we see like this, the B corrective wave going far below the 50% of the A corrective wave, watch it. Because we know the internal wave of the A, we are watching it carefully. Alright? Do not assume that every time you see a pullback from the 5 wave and then another 3, you're going to have the same scenario. There are also what we call the AB base. This is a portion of something you are learning. Alright, very important. The next thing, talking about zigzag correction tips. Sometimes you may not see straight away on the time frame that you are on the internal wave of the A corrective wave or any other wave. How do you handle that? So it may look a bit messy like this. So you may look at it. Where is the 5 waves now? Where is it? Do you see 5 waves here? You don't. So in this scenario, do you see 5 waves? There's no 5 wave here, all right? You may switch to another time frame, lower time frame. So if you are going to the lower time frame, you are zooming to the price to see the internal wave. So you will zoom into the lower time frame, okay, to see the internal wave of the wave that is not very clear for you because you want to look inside, okay? All right, here you see, now it looks like a tree here, all right? If I give to my chart to draw this line, you will say it went down and then it went up, it went down, it went up, and it went down. Okay, it's a bit messy. But if you want to see the internal wave, okay, of a correction, you may go into a lower time frame. This is the 4th tips. So you are counting the wave, or the wave is not very clear. You want to zoom into it. You go to a lower time frame. You go to a lower time frame. All right? This is very, very important. If you see the internal wave clearly on one time frame, you say, okay, George, this looks to me like a tree. All right? Now, it looks to you like a tree. If it's clear to you, you go to a higher time frame to see the bigger picture and say, where are we? What has happened before? See 1, 2, 3, 4, 5. This, in normal condition, should be 5. Unless this correction is not finished yet, all right? Because there are different types of correction. Ladies and gentlemen, I will stop here. And also, before I close, during the zigzag correction, the volume, trading volume will be very low. And also for traders that are using Fibonacci, what I've said to traders, one cannot use Fibonacci successfully if one does not understand the corrective waves. Very often, a lot of Fibonacci traders, they see a pullback like this. So if you see a Fibonacci retracement formed up for 5 waves, okay, so probably now 5 waves, know that there's a high chance, if you understand now what is a corrective wave, an internal wave of a corrective wave, there's a high chance that Fibonacci projection is not going to go far, that there's a high chance that the price may continue to move to the downside or to the upside, depending whether you are in an uptrend or in a downtrend. So this is it. Fibonacci traders, you see a calm down like this, they say this 50%, 61.8, they start buying like a crazy Fibonacci trader forcing the price. There are even software hedge funds that are forcing the price at a Fibonacci retracement point. It's a crazy market now. It become like a computer games. All right. So be aware of that if you're a Fibonacci trader. Understanding the internal wave and the zigzag patterns, trader will make a better decision. This is the end of this video about the zigzag correction tips. A continuation of this series of videos about the wave theory. One must separate the theory from the reality of the market. It is not sufficient to know, but one must also try to understand, okay, what is taking place, okay, in order to make excellent trading decisions. Until the next time, enjoy yourself and be very happy. We are the TSTWSYS008 traders. This is about zigzag correction tips. Speak to you soon.